Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to be talking about a stock called Valeant Pharmaceuticals that's been in the news quite a bit. And also we have Bill Ackman, who is defending his position. He's lost $1.5 billion in this position right now. He's made his year last year in 2014, but this year it's a different story. Now, I want to show you, we don't know anything about pharmaceuticals other than the fact they sell a lot of drugs. Here's the point I want to make. We have our trade triangles in here, and I'm just going to put the monthlies on. You can see the monthly kicked in right here at $213.84, saying that the trend had changed. Something had changed in this. It doesn't always know what it is. It's not important to know what it is. The important thing is the momentum and the perception had changed at this point in time. And you can see from $213.84, we're now down to $101, $112 lower. And if you put our weeklies in, you can see our last weekly signal came in at $220. So you're really short from $220 or out of the market from this point on. So here we are. With this sell signal here, we would not have bought this position here. We would have gotten back in at $220.42 to get short on September 22nd. You can see just in a very short period of time how much that stock has just collapsed. Again, the point I'm making is don't get married to stories. Don't get married to people telling you how this stock's going to do this, this, and this over some time. It may do, but we may have a chance to buy Valeant Pharmaceuticals at $100 a share and get long rather than being long at $200 a share. That's the point, is go with the flow. Perception is very, very important in stock trading and any type of trading. So let's move on to our next stock, but it looks like Valeant's going to close out the week on a very weak note, no pun intended, but this will be a new low close for Valeant today. So let's see what else happens to that stock and to Pershing Capital, which is Bill Ackman's investment hedge fund. Our next look at gold is basically the ETF GLD, and I'm going to put the Fibonacci retracement tool on this one as well. Click on the Fibonacci tool right here, click on the highest point and drag it to the most recent low point, and you can see it's the same situation there where you should be a buyer at 109.35. It's perfect Fibonacci retracement. Both of our trade triangles are positive on GLD, meaning you should be long this market still. So again, stocks are traded a little bit differently from futures, and we use the weekly and the monthly for GLD shares. So let's move on, but definitely want to be a buyer as opposed to a seller right here. Here's a stock that came on the market, very excited to have this Fitbit. The world has become fitness crazy, and which is a good thing, but it still hasn't traded long enough for us to get our monthly trade triangles in. But I like the way this stock is setting up, and I'll show you why. You have this really nice sort of base building. You can see right here, this sort of just nice base that's building. We've just gone over the previous highs right here and here and here. And I think we're going to see this market go back up. I think it's a very solid company. It sells a lot of product. I know a number of people here in the office have Fitbits and love them. And they're going to continue to expand that model. But again, we do not have a monthly trade triangle because it just hasn't been trading that long, but it does have good volume. You're trading over 2 million shares a day, which is good volume, good liquid volume, and we would be a buyer of Fitbit. Certainly if we go over this level right here, which is right around the 40-50 area, somewhere around those levels, I think that'd be an excellent place. But even here, I think it's a good buy. I think the risk is very, very low. Now here's a stock we think could be very interesting. That's Alibaba, and the key level we want to be on this stock is going to be 85.38. If we go over 85.38, we want to, it'll turn the trade triangle here green, and we want to be a buyer. This is obviously a Chinese version of Amazon. I think they're doing a lot of things right. It's had a very big pullback from the original IPO, and I think you are at a level now where it's come back. We may see some more sort of back end filling, which I'd love to see personally, and then we move over the 85.38, then it's a buy. So let's watch that very carefully next week. We've also had October was the first month we've had since 2011. We've almost 9% returns in October. Really a big month. It's the last day of trading for October. This is Apple. We still don't have a green trade triangle. I want to watch that very carefully next week. We're getting back to the levels we actually got in, 123. So it's 120.23 right now. Let's see how that plays out next week. But I was in the Apple store yesterday, as a matter of fact, and there were more employees in there than customers, which I was very surprised at because it's normally jammed. Also, they just came out with their Apple TV. We'll see how that sells, and we'll go from there. But watch this stock next week. It'll be a very interesting one to watch, particularly to see how we close today. On the euro, this is the euro to move down to the 108 level. We may have seen like a temporary bottom for the moment, but nonetheless, we still think that the euro can go lower vis-a-vis the dollar. Crude oil, we've had a, it's broken down, it's had a rally back, really hasn't gotten anywhere. Our triangles are negative on the monthly and the weekly. The daily is positive, meaning you should be out of this market for the time being. That's how we trade, with the weekly for trend and the daily for timing. Looking at the indexes, you can see we just sort of had a tremendous month in October. You can just see we've just gone virtually straight up from here up to here. Very, very good month, but the problem we have, which we've talked about before, is this amazing kind of resistance it's going to run into, in our opinion. So let's see how that plays out next week. Pretty much the same thing with the S&P 500. We just have to, look at this resistance area, which is massive in our opinion. It's going to be very hard to move through that. We may have to go sideways, maybe in the month of November before we go up, but generally speaking, this is going to be a very hard resistance area to jump over, in our opinion. Finally, on the NASDAQ, pretty much the same picture. You still have this band resistance right here, and it's not quite as big as the S&P 500 or the Dow, but certainly it's an area that could present some problems for this market. So I'd be a little bit cautious at these levels, and certainly we are approaching, getting close to a potential cyclic high in this market. 60 indicates a trading range, and I would treat it as such. Hey, we've covered a lot today. Thank you so much for all the comments on our blog. We appreciate that. Have a great weekend, everybody. Thanks for watching. I'll see you on Monday.